Hello, Warriors. Everyone doing okay? Hello, face. Put on your war face the day before Jackson Hole. Everyone doing okay? Hi, Glenn, Ash, Craig. Wallace is talking about a 3-drive pattern on the hourly. Good eye. Hi, Kevin, Patrick. I think we have a nice full house. Riding the curve is doing all right. IBW. How are you? Carlos. Long time. How are you, Carlos? Glad to see you followed me here to face. Hello, Joseph. Just looking at the crowd, looking for Don Mead. How are you? Ziggy's wants to have a bromance. I love you too, buddy. FX Glenn, how are you? Everyone doing okay? Hardianto, how's it going, buddy? Okay, hi, Jess. So I thought I'd start off with Pound Aussie here. We are diverging just like, I believe it was, who was it that's talking about the 3-drive? Yeah, Wallace. How are you, Wallace? Similar situation here. I know it's counter trend, but this is pretty classic. Sometimes on the 3rd drive, you get a fractal. You might get 3 down here. So I think between here and 160 or so might be worth a probe for something at least counter trend. Also, Stelios, saw you with your pom-poms, or heard you with your pom-poms on Skype yesterday in our group, and we had some great pips yesterday. You want to tell the community about it before I get into some of the trades here?
Sorry, what was that again, Dale?
That I saw you with your pom-poms on Skype yesterut doing a cartwheel for Greg Horvat. What happened?
Yeah. Greg basically put out a long Bitcoin pip yesterday morning, and within the end of the day, it was up 10% or so. So hit the target within the same day, and really, really awesome stuff.
Yeah. Okay. For you guys, you guys know what I call Greg. Call him the Wizard of Waves, and there's just another piece of evidence. Thanks, Stel. So,
well, thank you, Greg.
Huh? Well, yeah.
Thank you, Greg. Yeah.
Well, thanks for being the messenger then. And that's really great. I guess 10% is not a big deal in Bitcoin anymore. But that was a huge move. I'm going to get to your Euro Pound in a bit, but anyway, you guys with me on Pound Aussie. So, I agree. In fact, early in the week, guys, we've been talking about 27.50 in cable for a while. And we got pretty close. 91. I'm not saying they can't push it here, but as you can see, we're not confirming here. And EG is showing just how overvalued, or maybe you're, at least on a 6-month level, we had a throwover on Euro Pound. So it's still running. But I think we're starting to diverge a little bit here at this high. But really, conservatively, once we took out 90, you had to get out of the way. Now back under 90, you have something. You have to go all the way out to the weekly to see where we're at. We're almost about to take out this high on the weekly. In fact, some face guys, I think it was Chris Williams. If you're here, Chris, great call. You were looking for a throwover on the wedge, and you said this would be a magnet. We're only 10 pips away. But keep an eye on this. Just because it's making new highs, maybe the second drive is setting up here. This could end up being one. On the weekly, we're not taking out. This is a pretty strong reading, but as you can see at the last high up here in Euro Pound, we had a higher reading. So if we start to stall after taking out 25, conservatively, you wait for it closes back under 92. But I still think this is setting up for a reaction, kind of in a blow-off stage here on the daily. 4 hours, done nothing wrong. So what I teach on throwovers is, you know, you may want to get the edge because you're anticipating one, but you never know how far the rubber band can stretch. So I would wait for closes at least back under 92, 91, 90, back inside the wedge to negate the throwover to give you a sell signal. Everyone with me on that? Okay. Also want to point out something in CAD. We were live when the news came out, and there was a 4 hour real, you know, Steve watches the 4 hours. So I'm looking for where that big reversal candle was. I think it was here. But as you can see, we grinded lower here. And I know, you know, everyone's real bearish, looking for lower numbers, but it is a possibility here that we have a 3 drive. I think Hardianto pointed it out on Twitter. It's pretty classic. So I'm just giving you some things to consider. I'd be kind of careful into Jackson Hole. I have a feeling that some of the things I'm talking about we'll be able to do tomorrow. I didn't mean to do that. I have trouble with trend lines here. Probably my laptop. Anyway, you guys could see the 3 drive developing here in Canada, right there. And then when you go to a 4 hour, we still are making a higher low here. We have to get through this confluence of 650 for there to be game on for a rally above the highs. So, you know, if we get a pretty good hit in crude, crude's rallied, but if the commercials are right and large specs are wrong, we're going to get a hit in crude. And even though that correlation has disconnected for a while, it might be set up for a C wave up here. So something else I'm seeing here in USD CAD. Everyone with me on that? So those are some of the things that I'm looking at. I know that Steve's going to cover the board. S&P's under pressure after a huge update. You know, we still have to take out 80. So this too could have been a failing rally, right? Here's your first lower high in this grouping here, and this might be your second lower high. And then if you're a 3 drive proponent, we only have 2 here. So could be heading back under 2416. Maybe Janet's going to talk like a hawk tomorrow. That's possible, right? So, or something that Draghi says. So let me just quickly look at the euro. The euro, no follow through to the downside. Steve was right about this too. I thought we were going to have something more significant off the eclipse. We haven't, at least not yet. I can't buy it here, and I covered shorts. I don't know what to do right now. I think I'll wait for Jackson Hole to react to almost everything I've talked about today. Here's what you need to do. Anyone fall victim to impulse trading? You know, you walk in, you see something, you do it. Try this for a week. Okay, I do too, Ash. Okay, try this for a week. Do not take a trade unless you've planned it at least 24 hours in advance. Okay, Peter, try that. That means what you're looking at today and the technical work you're doing today is for a trade, not right now, but later, right? A few days later. Just like we talked about in cable, right? Early in the week. So early in the week, I said, this is not the low, right? Had a confirmed low. You know, we bounced a little in here. And I said that we would take out these lows. So this is planned down here now. So I'm getting the first indications of a potential turn. I just don't want to step in front of ECB tomorrow. And if you do it light, you do it small, and you just have your toe in the water and build the position instead of being all in and all out at the same time. So this was planned. So I believed we were going to get a new low. So here's another actionable thing I'm going to teach, that when you have confirmed lows or you have confirmed highs and you believe in that theory that I've taught, that markets rarely bottom on confirmed lows or peak on confirmed highs, then early in the week you would have said, you know what? This is a confirmed low. There's another low here. I'm going to try a short, looking for it to take out the low, and then I'll see if it confirms or doesn't confirm. So at the minimum, I wouldn't be short the pound anymore. You don't necessarily have to reverse, but as you can see, if you've been riding cable down, we're no longer confirming the price action. Okay, rule number 142. Yeah, I have a few of them. So let's see who's with us today. Steve's probably on a boat. And Val,
why would I be on a boat?
You're not on a boat?
No, mate. Why would I be on a boat? I'm.
Oh, I thought you were. I don't know. I thought maybe you might be working out and doing a little rowing, rowing in the Mediterranean. Huh?
I'm doing a lot of swimming per day, I have to admit, but not any rowing.
Okay, well that's great exercise, Steve.
Yeah, it is.
Are you a good swimmer?
Yeah, I think I'm more than decent. At my best, I was swimming like a couple of miles per day.
Oh my God, that's you're in shape. Can you swim the butter? Can you swim? The strongest swimmers were guys, I remember swim team guys, the strongest swimmers were the guys who could swim the butterfly stroke.
No, actually, I don't like the butterfly. I do freestyle, and I'm not sure how the other one is called in English,
anyway, they were the strongest guys. That's a very difficult stroke, isn't it?
Yes, it is. It is. To be honest, I'm Greek, so we learn how to swim very, very, very early. But I got into swimming more after I got a problem with my back, like 5 years ago. I then started swimming more intensely because it's one of the best exercises, when you have back issues.
Yeah, stretches you out, doesn't put a lot of pressure. Yeah, you don't want to do squats with a back problem.
Exactly.
Like Stelios is doing now. So
exactly.
So I want to acknowledge, Steve, early in the week, you said, based upon what you saw in the euro and based upon what you saw in the pound, even though euro pound was a wedge, it was an avoid for you because the two entities of it were telling you different things. That was a great no trade. Nice work.
Yeah, thank you. And as it seems, the technical picture of the euro and the technical picture of the pound were telling the truth. And obviously, as I indicated back then, that means that the ascending wedge in the euro pound could not actually prove to play out as long as the euro USD and the cables technicals were not lying. And, so far they haven't been lying. Although, as I said back then, and I have to stress it again, tomorrow we have Jackson Hole starting. Everybody's waiting to see what Draghi is going to say. So I think the focus is like 80% on Draghi.
Yes. It could be, Steve, don't you think it could be as wild of a day as an NFP or a Fed day? I mean, feels to me like it has that type of impact because people have been waiting so long for this.
Yeah, that's one of the reasons. And the second reason is that don't forget that this has proved, the past few days have proved to be very quiet in the FX world. And I think that, all this calmness needs some kind of a trigger to produce some kind of a move and some kind of volatility. So yes, I think that we might actually see some wild moves. And that's one of the reasons why it would be a good idea to have a look at the euro pairs specifically today.
Okay.
In Forex Analytics, we already cover, plenty of them. We cover the Euro USD, we cover the Euro Yen, we cover the Euro Aussie, we cover the Euro Kiwi, we cover the Euro Pound.
Yes, Steve, would you say that there are more patterns in play happening since the expansion of coverage on different instruments?
Yeah, yes, for sure. For sure. You know, one of the reasons we expanded the list of instruments we cover was that we often saw very nice opportunities in some of the crosses. And, you know, obviously we could not create a pattern in play if, that was not included in our system. So, you know, now that we expanded to, our covered instruments to 30, obviously, that gives us the ability to create more patterns in play without lowering.
Yeah, because you're covering them in the webinar, a lot of things that were not covered in the newsletter.
Mm-hmm.
And so, people that are subscribers, they're going, so we'd like pips on that, even though you were, giving it away. So,
we were telling where we would be buying or selling or whatever. Yes,
right.
For sure.
Right.
Although, as we've said plenty of times, and, this is not a sales pitch, it's a different thing giving an opinion once per day on a webinar, but it's a different thing, having live coverage and live patterns in play, etc. For example, Stelios gave the best example. It's an extreme, but it's the best example. Grega made a pattern in play yesterday,
right,
which within a few hours hit a 10% target. Obviously, that could not have happened with an FX pair, but equivalent situations, with, of course, at a lower degree, can happen within a trading day outside the hours of the webinar. Obviously,
exactly.
Right?
That's what I was going to say. We just selected this hour because it was in front of U.S. data. To help European and Asian subscribers be here and not have it, especially in Australia, have it be, 1 in the morning. All they have to do is stay up till, I think, 11 p.m. now. So, there's no way at times for us to know when we get a trigger outside of the webinar hours. The only way for people to know it is to be a subscriber and get the push alert. So, yeah, it's tough to cover 24 hours in an hour, isn't it?
Absolutely impossible. Absolutely impossible. Because obviously, we can't even predict what's going to happen. I mean, especially lately with all the political events and the geopolitical events, it's obvious that some kind of an event, some kind of a statement, can easily turn things around intraday, and you might be starting a day seeing X risk on or risk off environment, or dollar kind of movement, and you might get a trigger intraday that's going to completely shift the board. So obviously that's the case. Now,
so if you haven't tried it yet, it's $1, my friends, to try it. I've tweeted that, in my opinion, and people say I'm not objective because I'm part of this, that if there was a better FX team out there, that I would buy their research, and no one's come back to me with anything to compare it to, but you won't know until you check it out. So if there's any riverboat gamblers out there that are willing to risk $1, try out ForexAnalytix today. All right, Steve, let's go with some of your things with the Euro pairs going into Jackson Hole.
Okay. It's obvious that the Euro USD is in a textbook bull flag. That does not mean that the formation is going to play out, but it means that this kind of formation and this kind of an uptrend in the majority of occasions will play out by breaking in the direction of the trend. Obviously, you can turn that around, but it's good to know where your risk is and where you're wrong or where you're right.
Okay, so here's the key question. Let's say you're flat euro right now, okay, and I'm assuming you are, because even though it's a continuation formation, you don't know. I mean, we could come back to test to build the flag one more time down to 116.
Correct.
So let's say Draghi speaks and we're trading, we break out on the upside of the flag. How do you trade it? You just let it go and then wait for the next reset, or you go with it?
Depends on what kind of a trader you are, you know, and I cannot give you a hint about it, because there are people that would simply have orders to buy a breakout.
Okay, buy stops above the market.
Yes, and you know, yes, and get in on a break of this bull flag and you know, aim higher. For example, you know, you can even use a decently tight stop loss if you do that. That's not my kind of a game, but people can successfully do that. You know what I mean? There are other people that would expect a breakout in the new high, wanting to short that. So, for example, if you think that the Euro USD is stretched, you might be wishing to see the bull flag break above, see a new high getting produced, and then shorting that one. So, or on the other hand, you know, you might simply decide to do nothing. I mean, you know, it depends on what kind of a trader you are. But one
people
thing
forget that. You know what? People forget that's an option, Steve. And at times it's a great option, but they feel like, oh, then I'm missing something. So what? Like I said, Steve, like you do, Steve, I don't see you trade anything that you haven't planned or in advance. I rarely make an impulse move. In fact, a lot of your trades are planned not 24 hours in advance, but many days in advance.
Yes, many days. And plenty of them are never executed because
it doesn't unfold. Yeah, it doesn't unfold that way. Yeah.
Exactly.
But anyway, everyone promised in the room that they're going to not trade anything unless they've thought about it 24 hours beforehand. So we'll see how this experiment works out for people. I know it's a good tip. You know, your brokers may not like it. They love you.
Very true.
They love you to impulse trade on a tick chart. Right, Steve?
That's absolutely true. That's absolutely true.
All right.
Your brokers would love to see you trade like non-stop, getting in and out of positions 24/7. That's what they want. Okay, now we have Euro Swiss. Okay, I haven't changed anything in my view in Euro Swiss. I was bullish. I remain bullish. I think that this is a textbook. If you remember, I even asked, you know, for the benefit of our viewers, I even asked Gregor what his opinion is, and he's of the same opinion as me. I think this is going higher, very likely to 120.
You know, Nick showed it too when we were near the highs, and she said buy it at 1250 when she was here last week when we were on vacation.
And you can see this correction as a pennant.
Yeah.
So I think the Euro Swiss setup is very clean as well, very clean. I mean, I know no decent trader that would see this formation here and say that this is a topping forming. This is a top forming. I mean, this is not a top. This is a pennant. Okay, it might be a flag, it might be a pennant, but no matter how you want to interpret it, it's a bullish consolidation. Okay, so unless something breaks it, like some huge event risk that involves mostly the Eurozone, etc., 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 I truly expect, and we had drawn this from up here, when we saw this candle here, we said that, okay, it's overdue for a correction, and a correction to retest this red trend line, would be ideal. That this is not exactly what we got, but we're definitely within a bullish consolidation. Why not? We might see even another, move lower, and then take it from there. But
besides the form, Steve, of a triangle developing, you know how you like confluence. Look at that RSI reading at the high. What is it? 90?
Yeah. It's above 80 for sure, which means that it's very
So momentum confirmed that breakout. So, according to a theory that I believe in, markets rarely peak when they confirm highs with that type of extreme reading. That would be a rare event for that to be a top.
Exactly. So I'm very positive on Euro Swiss. I was since before we broke this trend line, since 109 and change, and I remain bullish. I think that this thing has no real resistance up to the 120 floor of the S&P. I mean, now it's not there, but there's thin air after we break above. So that's not bad. I mean, it's 600 pips from where we currently are. So the reward to risk ratio is definitely there. Now, having to do with the other two pairs,
I did witness you, and you were pounding the table instead of trying to top pick the euro to buy the Swiss, and your Euro Swiss was the way to go, and you were on top of it well before the breakout, Steve. I've seen you call a lot of turns, man. Really. For a patient guy, people think they have to get the edge and be ahead of the curve to catch turns. But you're, what would I say? In a disciplined and steadfast way of waiting for confirmations. You don't miss turns being patient.
No, I agree with you, obviously. Now, having to do with the euros has not provided a breakout yet, but definitely, just seeing this kind of price action, nobody can say that it's bearish. Actually, it's more or less bullish, and a close above 150.20 will confirm. On the other hand, Euro Kiwi has already been leading. And that's what we wrote in our analysis, like, what was it, 3 days ago or something like that? I think it was on Monday. Because if you look at it, Euro Kiwi just found support at the first support zone that was there. So, this on itself, especially after seeing such a candlestick that we got here, this was a proof that we're going to new highs, and we warned about it. And today, with this kind of spectacular candlestick, we already got new highs. And the next target is now at the 127.2 at 165. So, the next target is 160 pips higher. So Euro Kiwi looks bullish as well. Now, we can have a look at EuroCAD, which we don't cover at FA, but as you can see here, EuroCAD has not been as clean, and the reason is very simple. We had taken this short here, we booked some nice profits, then we got the rebound, then we got rejected from this zone, which is quite important. It's almost at 150. But EuroCAD is not a pair I would be trading, and the reason is simple, because for the time being, both the euro and the CAD have been showing strength. And as I have said many, many times, you do not want to be short or long a strong against a strong currency, or a weak against a weak currency. The best idea is always choosing, if you want to be long a strong currency, to be long against a weak one, and if you want to be short a weak currency, to be short against a strong one. So the EuroCAD does not present one of the best opportunities, and more or less, I would say, applies to the Euro NOK. Now, if we dismiss this as a fact, I can definitely say that the Euro NOK followed through with what we expected, but the current price action does not look bullish in any way, simply because somebody could interpret it as a simple consolidation, and by doing this you can see it quite clearly. Okay, so Euro NOK, if I had to do something with it, I would most probably be short than long. Okay, but still, as I said, if you want to be short a euro, choose a strong currency, and NOK is one of them lately, but you might want to go for something else as well. That's with the euro pairs, and as always, as Dale has said, have a plan. Make sure. Let's have a look at the euro yen as well. Okay, the euro yen is one of the pairs that topped out in a perfect way. It gave us an ascending wedge. Even from an Elliott wave perspective, it was quite clean. But to be perfectly honest, I'm not very sure what I would do with it right here, right now. The reason is that we've already seen the minimum of a correction that we could expect. We tagged the 38.2. We even had a potential ABC. My gut tells me that it might move lower, even to test the 125.80 area, but I'm not convinced yet. So my bias says that it's going to move lower from where it currently is, but my conviction is not high. Okay, so if I had to be something with euro yen, I would be short, but it's not one of the pairs I have very high conviction at the moment. Now, having to do with the euro kiwi, with the euro pound, this is very interesting. Dale already mentioned it. We've already got an overthrow of the ascending wedge, but we're now almost testing the previous high, the 2016 one, at 92.25, and we even have this ascending channel, which the resistance is currently like 40 pips above that target. Given the fact that the RSI is almost at 80, I would say that the euro pound, technically speaking, is at an excellent position to see some euro weakness, if that's what the Jackson Hole and Draghi's remarks or comments might be. So I'm still monitoring the euro pound. I wouldn't be long. In fact, I'm looking for an opportunity to get short, but I haven't found one yet because the ascending wedge looked good, but we never got a trigger. So it's not only
where's your top red channel line come in the next few days?
92, 0, 92, 60, 70, 80, depending on the day.
Okay. All right.
Yeah, so below 93 for sure, for now. Yeah.
Okay.
So it looks interesting, and let me zoom out so you can have a look at it as well. So I would really like to find an opportunity to short this for a move to at least 90, although ideally my target would be 0.8870. So that's where I would actually be targeting for if we see some kind of a reversal. And trust me, if we see some kind of a nice hefty daily reversal, I'm not going to hesitate to take that short, even if that day brings 100 or 150 pips of a move lower, simply because I believe that when this thing snaps, it will produce at least a 300-400 pip reaction lower.
Like it did in 2016 from the high.
Yeah. Yep.
Within about 5 days. Yeah.
Yep.
Okay, buddy.
So
nice analysis.
Yeah, this is my view on the euro pairs. Now, having to do with stocks, because I know that a lot of people are monitoring them. As I said the day before yesterday and yesterday as well, and Grega made a very good comment about it. So far, at least the Nasdaq and the SPX and the Dow Jones, I have to add to this, have given us almost perfect ABC corrections. Okay. Which means that, especially from an Elliott wave perspective, somebody should be looking higher. Yesterday's candles were also very bullish, which add fuel to that kind of an interpretation. But from a technical analysis perspective, from a basic technical analysis perspective, I would say that I wouldn't want to be long U.S. stocks risk at the moment, not because I don't believe they can move higher. Of course they can. They're still in an uptrend, and a very serious uptrend, but simply because I believe that we're closer to a top than anything else. So my favorite index to be long, if you want to be long risk, would definitely be the DAX. The reason is the following. The DAX provides a very nice confluence to be long, which is actually this area, 12,000, I even mentioned it yesterday, 12,325. Why? Because that area would be the neckline of an inverted head and shoulders formation. You can see it here, shoulder, head, shoulder. It would also mean a break above this descending channel. And it was also the 61.8, you know, in the move lower we had from this low, which in essence we might have created like a, you know, we found the bottom exactly at, you know, this low here, if this proves to be a bottom. So I would not be long the DAX at the moment, simply because we're still respecting the descending channel. But if we break above here, and obviously some Euro USD weakness will help on this way. So for example, if Draghi talks down the Euro successfully, I'm absolutely certain that this setup would get triggered. You know, if I wanted to be risk on anything, that would be the DAX. And that's what I'm looking to be long if we get a break above there. Okay. Now, having to do with the rest, I do see the bullish setups, but I will avoid, you know, being long. The only reason I'm mentioning them is because you should not jump the gun being short, simply because, as we've said before, especially for the SPX, which is also considered the risk-on benchmark globally, unless we see a break below 2,400, there is absolutely no serious technical damage done to the uptrend. Okay, and I know I've stressed that out plenty of times in the past few weeks, but I want to make sure, you know, that people understand it very well, because I know that a lot of people intuitively are looking, you know, to top pick it. I mean, top pick, you know, US indices, but, you know, this is a game that needs you to be patient, and you shouldn't be jumping the gun unless you have some nice confluences or whatever, and you shouldn't be eager to be short, simply because when we actually top and when we actually start a bear market, which sooner rather than later is going to happen, trust me, the downside that you're going to have ahead of you is going to be big, big. Usually, historically speaking, and having a look at business cycle and stock market performance, such a bullish trend like the one we recently, like the one we had in this business cycle, might even produce a 1 year, 1.5 years of a bearish market. You don't want to jump the gun just to be like a few days ahead of the rest. You'd rather have some confirmation, and when you get confirmation, the downside that you might still have ahead of you might be like 40%, 30%, 25, 40, who knows, but it's going to be a lot. Okay. Stelio and Dale, do you want to help me with some questions?
Yes, you got plenty. Go ahead, Stel.
No worries, no worries. We got, I'll start from the beginning. We have Conrad who's looking for copper. You have a chart on copper? Dr. Copper?
What a question. Was there a chance I didn't have one?
Let me ask you this, Steve. What don't you have a chart on?
I'll ask him for like
lithium
or something.
Lithium. I was on that for a while. They tried to stabilize me.
Okay.
I didn't know. I didn't know. I didn't know they were going to use it in batteries. I would have stayed on it. Go ahead. Go ahead.
Okay, this is what I have in copper. Obviously, we had said that as well. Copper had a bullish break higher. There was no question about it. There was no question about it because if you see, copper bottomed with a triangle. That's rare, by the way. Usually triangles are continuation formations, but in this occasion it bottomed with a triangle. And you know, after giving us a clearly impulsive move, then we saw a very nice. It also topped actually with an ascending wedge, and then it gave us a very nice, very well behaved correction within a channel. Okay, this is a perfect correction, this channel correction. And then it starts a new impulse higher. As you see, we're currently within a channel. So, this impulse is currently, very well behaved, is also within an ascending channel. And for the time being, I see absolutely no reason why somebody would want to be short copper. Of course, at some point, we're going to see a move like this. We're going to see a move like this that might find the bottom somewhere there in this high, for example, and then a continuation higher. But what I expect more or less is that the next move lower for copper is going to be simply corrective before we get a new high. So,
Steve, perhaps you could have a measured move count if you take before we broke out of that consolidation in June, July, what was the wave from the low to that high, and then added on to the breakout at 250. So yeah, see it down there, it was what, $2 to 270. So that would give you about 330 as I eyeball it for a measured move breakout.
Yeah, and you know something, any move to retest either this high or a little bit lower, I will still consider it like a corrective move. Okay, so would I be buying copper here? No, I wouldn't. Where would I put my stop loss? But would I be short copper at this point? No. I would actually, if I wanted to trade copper, I would wait for a decent pullback, and I would, try buying that one. So this is my view on copper. Okay.
Okay. Next we have Ali asking for S&P 500.
By the way, keep in mind we have RSI divergence here, so a corrective move might be near. Yesterday, as you see, we had a pin bar. Today we have a black candle, but that's not enough. I would definitely need to see a move, below this point, this high and this channel, before calling, the beginning of a correction. S&P, we already looked at the S&P.
Yeah.
So if the S&Ps fail, I think that'll pressure copper. So if I think they're moving pretty close hand in hand, except for recently, but I think risk off would take copper down, might take gold up. You know what I mean? In fact, I call copper the metal of construction and gold the metal of destruction. So
that's a good point. By the way, since you mentioned gold, and I know because more or less people are constantly asking about the precious metals, there is nothing to do with gold. It's exactly what I said yesterday. I mean, would you be selling here? Yes, you can, with a stop above the highs. So this is a valid trade. If you believe it's going to go lower, and the risk is there. But if you're bullish the metal, are you going to buy here? Where would you put your stop loss? So if your bias is being long, which personally I'm inclined to believe that it still has a more than decent chance of breaking above 1300. So I'm slightly tilted to the bullish side, but there is no reward to risk buy it here. But if you're convinced that gold is bearish, you know where your risk is. It's at around here 1,301 to whatever this high was, and you can easily look for, because if this rejection from up here gets confirmed, I think that we're going to retest 1,257. So if that's what you want to do with gold, go ahead and short it from right here, right now. Other than that, I think it needs a little bit more patience to see what's going to happen. Same thing, I mean, even more actually with silver. Silver has managed, I mean, this is a very rare occasion. Silver has managed to produce 1, 2, 3, 4 spinning tops and one doji within like 6-7 trading days. So silver market is completely stunned at the moment, and completely it's like somebody hit the pause button. We're stuck below 1670 and 1720, Both of them are zones of interest. And, the metal is doing absolutely nothing. Absolutely nothing. Usually, of course, these kind of consolidations will break in the direction of the previous trend. So, my gut tells me that this thing is going to be resolved to the upside and see a move to 1775. And that's also one of the reasons why I'm more inclined to believe that gold is going to break to the upside as well. But, that's just a simple observation, from the price action, because you never know. I mean, the more we spend time doing absolutely nothing, the higher the likelihood that people that have bought it are going to get frustrated and think that okay, let's get out of this trade and see what's going to happen. But this on its own is going to trigger a move lower. So this is my view on metals. Now we covered copper, we also covered gold and silver. Other questions, Sergio?
Okay. Yes. David is asking for the guppy. We haven't covered that yet today, have we?
No, you're absolutely right. By the way, we didn't even talk about the cable, and now we got to the point that I don't have to say much about cable because cable has tagged to perfection my target, which was 128. So what happens from here is I will tell you that I'm inclined to believe that it will continue moving lower, but my conviction is not high. I had a high conviction that a failure of this ascending wedge would take us to 128. And since this move has actually unraveled, in a quite convincing way, I have no reason to bottom pick it and buy it here at 128. Although I would understand why somebody would want to try that, because this is a zone that has, successfully provided support in the past. I'm personally not doing anything unless I see some kind of a big reversal. Because if I see a big reversal on such a support zone, then I'm going to be like, this is something interesting. And then I might be looking to buy, especially if this kind of a reversal comes with some kind of a convincing move that will tell me that the dollar wants to move higher finally. So I already used a lot of ifs and whats and buts or whatever, and that shows that I need to see a lot of stuff to make me want to buy cable. Okay, and currently I only have one reason to do that. It's the fact that we're on a support zone, but that's definitely not enough. That's definitely not what I require for me to get involved with it. So the next downside target is obviously the 78.6 at 127.35. But personally, I think that if we get down there, we're not stopping down there, and we're actually headed lower to the 200 DMA, which is at 126.40. So I can easily see cable having another 150 pips lower. But let's see what tomorrow is going to bring, and by tomorrow I mean let's see what the Jackson Hole is going to bring. Perhaps we get some kind of a trigger to be a little bit more, a little bit less bearish. The dollar, perhaps euro is going to move, and that's going to help the dollar as well, etc., etc., etc. So it's a wait and see game. It's a wait and see game. Now, having to do with a guppy, because I know that this was the initial question, but it would be good. Listen, we said that even when we cleared this. I was looking for a move here. We got that. I said that if we penetrate lower, I'm looking for a move here because we had a very nice confluence. We got that. But then we started bear flagging, and that was a signal that gap is moving lower. And truly, once this bearish consolidation got resolved, we kept on moving lower. And even the past couple of days, I think I wrote it in analysis as well, were obviously showing that gap is going to resume lower, simply because when you get like an inside spinning top and then you get another spinning tops are indecision channels, but when you see them in an uptrend or in a downtrend and they don't get followed by a reversal candle, it simply means that the market is taking a breather before resuming, to the direction of the recent trend. And if that wasn't enough, I can easily see the potential for a 5-wave move lower here, like 1, 2, 3, 4, 5. Okay, so simply put, I remain bearish the gapping. I think it's going lower. At some point, it's going to give us a rebound, but I think that as long as 142 holds, that's going to be a rebound that you should sell as well. What else, Telio?
Yes, we have Dave asking about the Aussie dollar, and then Aussie Kiwi as well. So if they're related, so might as well have a look at them both.
I will start by Aussie Kiwi simply because Aussie Kiwi has, I wrote that yesterday as well, has confirmed the break higher. And that tells me that it's a fact that we're going for the next trend line, and the next trend line is major. I'm zooming out so people can see. The next trend line, which passes at around 110, which also coincides with the previous high here, so it's a nice confluence, is in essence this triangle's huge triangle's resistance. So let me be clear. This was a bullish break, and the fact that we're accelerating now to the upside is confirming that. But a break above 110, which is the confluence of this high and the descending trend line, in my opinion, will at least yield a move to 113 and that zone. Okay?
Looks good.
Let's go to the Aussie. My opinion about the Aussie remains, I said it yesterday, nothing has changed. As long as we remain within this pennant, even if we move lower to retest its support, I expect another high. Copper, since we had the conversation about copper and my outlook, my view on copper, also confirms this bias that I have. So Aussie is personally telling me that it wants to break to new highs. Okay. And the fact that Kiwi looks as shit as it does, in combination with my view on the Aussie, is another confirmation that the Aussie Kiwi is currently very bullish. Kiwi, I even sent an alert before, is currently at the bottom of a very important support resistance zone, and it looks very, very bearish. We talked about two scenarios 2 days ago. One scenario of seeing a rebound from there, the other scenario of making this a head and shoulders formation. And as it seems, the second scenario is playing out, and the Kiwi does not seem to be getting any bid. Okay, so I'm clearly not bullish the Kiwi. It gives me no reason to be so, but the Aussie is a totally different story. So the Aussie Kiwi looks very, very good. What else, Telio?
Okay, one of our friends is asking for your chart on kryptonite. I'm kidding. He is actually saying it for a joke. USD CAD is we're being asked by Rob.
Yes, and since we like to group things up, let's see both USD CAD and USD NOK.
Yeah.
Okay, I have no new comment to make after yesterday for USD CAD. USD CAD, I have two scenarios. One of them, an immediate, which is my main scenario, an immediate push to new lows. The other one is one leg higher and then a push to new lows. But let me be clear, as with the Aussie USD, but in the USD CAD, I have more conviction. I have no doubt that we're going to see new lows, no doubt. I'm just not sure if it's going to come from here or from a little bit higher. But I have no doubt it's going to new lows. Same, the exact
I would love, I don't know if I'm hoping, but I'm thinking maybe this is it, that we get that push. Yeah, the NOK looks so much weaker than Canada. That we get that natural push up towards that 130 level. That would be pretty classic retest of the breakdown.
this is the reason that after clearing all my trades, because I would be 6 days off for vacations as I was last week, the only trade I've re-established is being short the USD NOK, and it's working out pretty nicely, and I'm sticking with it. I really believe it's going straight ahead to new lows. So yes, between the USD NOK and the USD CAD, I'm clearly even more bearish with USD NOK. It's more than apparent by the fact that I'm actually short.
Yeah, that's always more than an opinion.
Yeah, exactly. I put my money where my mouth is. Yeah.
There you go.
Yeah, okay. Arif is asking about dollar yen. We have a look at that now, we didn't.
Oh, yes. Yes. Dollar yen. It's a good question. Thank you for mentioning it, Arif. Listen, dollar yen. Simply put, I have no reason to be bullish, especially as long as we remain below 111, 112, but at least 111. So I don't like the fact that it has held 108.80 so many times, but that is not enough to turn me bullish, not by far. So if I have to be something USD yen, it would be definitely short, and only a move above 111 would make me reconsider. As simple as that, Arif. Okay. What else,
that's all we have so far, actually. And Martin says, nice analysis today, Steve. What do you mean, Martin, today? It's every day it's nice.
Thank you very much. Dale, what do we have for an interview today, by the way, mate?
Oh, we have a great guest, Jeff York at Pivotal_Points. And in fact, before I bring Jeff on, let me grab the screen from you and I'll show you what kind of people follow him. All right?
Definitely. Please do.
Huh?
Yeah, please do. Please do. Take the screen.
I'm going to. So I went to Jeff's website, and I'm going to go to Jeff in a minute, but I just wanted to show what I had here. Here's Jeff. Okay, and he's a veteran. Look, he's got some gray hair. Seen a few cycles. But check this out. Peter Brandt, Abigail Doolittle, a lot of people that are gurus in their own right follow Jeff. So Jeff's a great follow. And I'm looking forward to speaking to Jeff. I spoke with him once before. It was at FX Street. So without further ado, I would stick around for these pivotal points. I think they're going to play a great role in the upcoming days and weeks ahead into the fall and into the winter. So Jeff,
Perfect.
Thank you for taking.
I'm really looking forward to the interview. Enjoy, Dale.
Okay, thank you, Steve. Nice work today. Great call on avoiding the euro pound and now having some ideas about what to do with it. And I think you made us all very well prepared for Jackson Hole tomorrow with your views. So great job, Steve. Okay, Jeff, I'm making you the presenter here. So I'm looking forward to hearing your voice again. I think it's been a few years and seeing your pivotal points. There they are. Hi, Jeff.
Hi, Dale. How are you?
Oh, great, buddy. It's so nice to have you back. Thanks so much for being open to being interviewed by me more than once.
Well, thank you for inviting me back. It's a pleasure.
So were you in Colorado for the eclipse or in Florida?
I'm back in Florida. I was in Colorado for the month of July. It was cold. It was rainy. Highs were only in the 50s and 60s, so I was freezing. I came back.
Yeah, global warming. I'm in the high desert in Temecula, California, and compared to last summer, this is the coolest summer I could remember. Hardly needed my air conditioning. It's kind of strange. There are some guys I interview that think we're headed towards they're big bears, secular bears, and what's happening with the economy and stuff, but that we're actually heading towards a cooling period and maybe even mini ice age. So anyway, this is the coolest summer I can remember in Temecula, California. So it was hotter at the beach. So great to have you with us.
Thank you.
I read the bio that someone from a pit trader from Goldman is what got you going on looking at pivots.
Yeah, back in, I started trading in the mid 1990s when a monkey could trade and whatever you bought went up. AOL was up $10, $20 every day, and Broadcom and Cisco and a lot of those companies. So when I started trading, I thought I was a genius because I was just printing money every day. And then I got hit with the 2001 correction. And I had never been through a correction before, so I thought it was just a typical pullback, and lost and gave back a lot of the money. And then I met a Goldman trader, and he said, and I started trading ES minis at that time. He says, I trade in the CME pit, and we put pivot points on our charts, and that shows us where to buy and sell. And that was always my biggest problem as a trader, was identifying where is the best buying point and where is the best selling point, without having to guess and drawing lines and using the moving averages that I wasn't having very good success with. So the pivot points really helped me a lot as a trader, identify where to get in and where to get out.
So let me ask you this. People that look for a lot of pivots, they're trained to look left for supply demand zones. Is that part of it, or how do you calculate your pivot areas?
With the pivots are a quantitative math calc, actually. They're based on the previous period's high plus low plus close divided by 3. So if we're using daily pivots, we're just looking at the previous day's high plus low plus close. If we're looking at weekly pivots, it's the previous week's high low close. If we're looking at monthly pivots, the previous month's high low close, and yearly pivots would be the previous calendar year high low close. Okay,
well, it's simple.
Yeah, it really is. It's just a quantitative math calc, and based on previous high-low close. It's pretty simple, and it seems to have a lot of black box computer algorithms seem to use them a lot because they're just uncanny the way that price pivots at these pivots. I don't know how else to describe it.
And it shows what a giving spirit you are, because you could have said, "Oh, well, Dale, that's proprietary." But I've always said, Jeff, if you can add and subtract, divide and multiply, you could trade. What do you think?
I agree. Totally agree. I mean, pivots are not, they're a free indicator available on most charting platforms. I'm just showing people how I use them to make money.
Okay. So we're looking at this REZ. What does REZ stand for?
It just stands for resistance. It's just an abbreviation for resistance. So here's my S&P 500 chart. Earlier in the year, back in February and March, it came up to the yearly R1 pivots here. These are yearly pivots on this chart. And you can tell a yearly pivot because it spans the whole length of the year. The yearly pivot is good for the whole year. It doesn't change. It's good from January 1st through December 31st. So the S&P really respects the pivots. Came up to the yearly pivots back in early March, we can see here. Pulled back, and then we broke through, and now we came up to these yearly pivots, and now we're pulling back. So I'm looking for this pullback on the S&P 500 to come back down to this 2400 level. And one of the things that I'm seeing as a possibility here too is a long-term head and shoulders topping pattern on the S&P 500 developing.
Interesting.
This could be possibly the left shoulder. The head was made recently, last month and this month, and if we come down, bounce off of this 2400 level, come up, make a right shoulder, and then close below 2400, that would be the neckline on the head and shoulders topping pattern.
I'm curious, Jeff, how were you able to identify the resistance level in the S&P since we had never been there before?
Well, again, the pivots did it for me. It's the math calculation. So the charting software automatically draws these support and resistance lines for me. I don't draw these lines. The charting software.
It was predicted before it got there?
It was predicted on January 2nd, pretty much, yes.
That's amazing.
Yes.
It saved me a lot of grief.
Well, so we knew back on January that the market was going to come up to at least 2400, and then we were going to have a pullback there. And that's exactly, we got a nice 80-point pullback at that back in early March. And then we knew once it broke through that level back in early or late May that the next level was going to be 24.82 to 24.92, and that's exactly where we came, and now we pulled back again. So it's amazing in how canny these yearly pivots work for the biggest trades. And I've learned over the years that the biggest reversals during the year occur at yearly pivots. So we use yearly pivots for our long-term view. We use monthly and weekly pivots for our shorter-term views.
Who's we?
My clients, my traders.
I thought maybe you had a split personality. Sometimes when I say we, huh?
My evil twin?
Yeah, sometimes when I say we, I'm going, why am I saying we? It's me. It's my thought. But anyway, I thought I'd throw it out there. But it's good to say we. It sounds like we have a huge research team in a huge office going over, you know.
I'm a
you
one-man.
don't need that. You don't need that.
I'm a one-man show. I have 100 and some subscribers that subscribe to my my service. A lot of them are hedge fund portfolio managers from around the world.
I would bet you're going to have at least one more after this forecast, especially since, you know, the yearly pivots that you brought up could have saved people so much aggravation and heartache just sitting back and trading in between those pivots. So now we're looking at quarterly here.
Well, now we're looking at, we have quarterly and yearly pivots in this area here, but you know, I'm just showing you a candlestick chart. But here we have the monthly pivots. The M stands for monthly, and you can see these little shorter pivots. These stands for weekly. So when I look at a chart, I can see the short term using weekly pivots for support and resistance. I can see medium term using the monthly pivots for support and resistance, and I can see the long term view using the yearly pivots for support and resistance.
Right. So we're kind of in between a few. What's the interpretation? I know you said that perhaps we could have a head and shoulders, but we would need another touch of yearly pivot. Yeah, and then a bounce for that to happen, right?
Yeah, it needs to come back down and retest this this 2400 level, in my opinion.
Okay.
Yeah, but for today, this week, we're watching this 2440 level, the weekly pivot here. Yesterday's high was right at the monthly pivot at 2454. So today I'm looking for a pullback to the weekly pivot here. Let me see if I can blow it up a little bit closer for you guys. And I'm looking for resistance at 2460. So I'm just using
that's a Mr. Magoo chart. Do you remember it? Are you that old?
I am.
Okay, yeah, Mr. Magoo. Anyway, so great look on the S&P and kind of you can imagine a path it might take. I noticed that on your website that you also pay attention to what our bailiwick is, currency. And, you know, it was a pretty surprising move to most. Now, I have to admit, not us, this weakness in the dollar and the strength in the euro. Unless you want to stay with the S&Ps, I'm interested in your take on euro, some of your yearly pivot points and so forth.
I don't do a lot with currencies, but I do the euro dollar and CAD and in a few of them, but I don't do a lot with currencies. But the euro dollar does love the pivots. I'm looking for strong resistance. This past week, last week, the euro came back and pulled back to the monthly pivot, the MP. This was our support zone here at $1.66, $1.1666, excuse me. This is where I was recommending to add to your position, and this is where I see the euro going to the yearly R2 pivots up here at $1.20 to $1.21. This should be strong resistance for the year on the euro dollar.
Okay, that's monthly, yearly.
We have monthly, yearly, and weekly. Right, so we have a strong confluence of pivots up here that should be strong resistance when price gets there. Pivots only show me when price gets there that it will pivot. It doesn't tell me when price is going to get there. Right. It doesn't show me the route that price is going to take to get there. But I do know when price gets here that I've got these are R2s, I've got an 82% chance of price failing in there. So.
Wow. Yeah, so that's a pretty good percentage to go with. So
exactly.
Do you find with your method, since I don't think you go beneath daily pivots, do you ever drill down any further, like 4 hour, or is daily the shortest pivot zones that you pay attention to?
daily is the shortest I go to. Here's my intraday chart on the euro that I have open, and we can see so far today the DR1 stands for daily R1 pivot.
Right.
So I do use daily pivots on my intraday charts. I don't personally like to trade the daily pivots because I'm not a day trader. I'm more of a swing trader and a position trader. So I like to take trades on the weekly and monthly or yearly pivots.
All right, so you have to be a pretty patient guy, Jeff, because I'm assuming
I am
with this that there are a lot of times you're out of the market.
There's a lot of times I'm just sitting waiting for price to come up to a weekly or a monthly pivot to take a trade. Absolutely.
So was that something that was difficult? I know it's difficult for a lot of people to, Tom Petty says the waiting is the hardest part. It is for me too. And how were you able to discipline yourself? I mean, losses will discipline you if you don't wait for setups. And I kind of have a deal with our community that they don't take a trade they haven't planned at least a day in advance. So,
right.
How were you able to become patient? Because most of us are not born with that inherent trait. Was it just belief in your numbers enough to say, why even mess around when I don't have anything here?
Well, I've learned over the years that, making too many trades can be like a dog chasing its tail in a circle. You're up, you're out, and I don't like to trade for 20, 30, 40 cents. If I'm looking for the low hanging fruit, and the low hanging fruit for me seems to be at the weekly, monthly, and yearly pivots. And so that's why I wait for those trades. Yes, it was hard at first, but after trading for 20 years and being a day trader for half of those years, it's much nicer now being able to relax and not chasing candlesticks. It's up, it's down, it's up, it's down. It's just so much easier now setting alerts, at the weekly pivots or the monthly pivots and just waiting for price to come to you.
So you can't teach that. That's experience. It only comes with the passing of time. And, you did it, been there, done that, may have liked it when you were a younger guy, more testosterone flowing in your system. But now you're talking my speed now too, Jeff. And sometimes when you have a daily community, people are always looking for something to do. And I remember earlier in my career, I would press to try and find something to do to entertain people. Now I say, you know what? I'd rather bore you than press to come up with an idea, because the good ideas hit you right in the face, don't they?
Absolutely. And a lot of times I've learned that the day traders miss the big moves, and a lot of times the big moves happen in the middle of the night. How many times have we woken up when we've seen, we're down to 300 or we're up 300 or 400 points. So, and if you're a day trader, you're sitting there, waiting for an opportunity to buy or sell, where if you're a position trader, you're already in that position.
Let me ask you this, as far as money management, when you have signals at your pivots, do you go all in with your position on the initial entry, or do you piece yourself in waiting for more confirmation to build a position?
I scale in. For instance, here's the SPY. Let's bring this up real quick.
All the best guys I've interviewed scale.
Yeah, I've learned, because I just don't know if this 248.70 or the 249.70 pivot is going to be the showstopper. So I'll buy some puts here, I'll buy some more puts there. So that's the way I like to work, is I'll scale in on the different pivots, especially when I have a few pivots that are close to each other.
How about coming out? Same way?
Same way, exactly. I always like to keep a runner. Exactly.
Okay, and for risk management, in case the pivots don't hold, are you waiting for, if you're using a daily pivot, you wait for closes on the daily to tell you you're wrong? Or if you're using a weekly, you look for closes that negate that pivot point to get out?
Yeah, I'll watch on the weekly pivot. If price goes over it, during the day, that would be my signal to get out. Exactly.
Okay.
But I don't use the daily pivots very often. I use more weeklies.
Okay, so I have a question, and you already answered it, but I'm wondering if you could do it again. Can you ask how the math calculation is of that pivot levels? He understands Go ahead.
Yeah, the standard pivot math calc is the previous high plus previous low plus the close. So the previous, if you're looking for a daily pivot, it would be the previous day's high plus the previous day low plus where it closes. And you add those three together, divide it by 3, and that gives you the pivot, the P. And then once you have the P, you can go and figure out where the R1 and R2 levels are and the S1 and S2 levels are. But the easiest way, I don't do pivots manually. You know, every charting program today has pivot points built in as a free indicator. So just let your charting do the calculations for you.
Okay, great, Jeff. And do you look at gold as an asset class? Is that coverage in gold part of your service?
Big time. Here's my gold chart.
Yeah, I'd like to see this. So we're at it's been stalling at the monthly here.
Yeah, here, let me go to a year-to-date chart here on gold. Let me we can look. So the long-term picture on gold is it came down this yearly pivot. This is on the December contract. So we'll say right around 1,200 on gold cash has been the yearly pivot, and that's held all year as prices come down. So that tells us that gold is going to come up to the yearly R1 pivot sometime this year, which is at 1326 to 1350. So this is where we're expecting gold to come up to. Currently, on a shorter term period, gold right now is testing strong resistance here at the monthly R1 pivot. And so we're looking for resistance this week on gold between 1297 and 1308. And
so would you look to buy the pullback to weekly support 1 and 2 should it happen?
Yeah, if gold, I don't want to be a buyer here of gold, but if gold comes back down to this 1250, 1274 level, well, the weekly pivot's going to expire here in a few days, so I probably wouldn't do that. But if it pulled back to this 1250 level, absolutely, I'd be a buyer there with the target up here, you know, at 13 and a quarter to 1350. But if we don't get a nuclear war, I think 1350 would probably be the best case scenario on gold. If we get a nuclear war, you know, that could go a lot higher.
You know, it's just weird that we're even talking about it.
I agree. It's even sick that we're talking about it. I agree.
Yeah. So, but you know, brave new world, right? You never know. I mean, let's face it. Has man ever created a weapon that he only used once? So, anyway,
here's same thing with GLD. Here's a GLD chart. As you can see, GLD found support this year right at this 114 level. So best case scenario, we're looking for GLD at 124 to 126 this year.
All right, the bonds have been pretty confusing for people. I'm interested. Treasuries or TLT, what your look may be on that. So it looks like we have TLT here, right?
Yeah, here's my TLT chart for the year, daily chart. TLT came down to the Fibonacci yearly S1 pivot back in March, and then it rallied back up to the yearly pivot here. Right now, TLT's got resistance between, it's right around 127.50. We're pretty close to there. 127.50 is going to be the monthly R2 pivot. We got weekly R1 here. So short term, look for strong resistance here at 127. Longer term, it could go up back up to 131. 132 is DeMarc's high pivot. We got Woody's yearly R1 pivot up there. So
is that short of the all-time high or close? I think the all-time high was 35 or so. That would still be a lower high.
Yeah, the all-time high is at 144. Yeah. So it could come back up to this 130. There's a big gap up here too at 130.
Yeah, that was the election.
Right. Exactly.
Okay. So yeah, I thought that we'd go back there and try and fill that gap eventually. How about crude, Jeff? I mean, you know, you're talking about war. I was interviewing Kirk Spanos this week, and Kirk thinks that things are set up that the next conflict is going to be with Iran sometime in the spring of next year, and he's looking for a major bull move. But the current setup with COT is large specs are longer than they were when crude was over 100.
Right.
And the commercials are pretty short, so wondering where you have some yearly support levels and stuff on that.
Well, so far crude has been holding the yearly pivot down here. Oh, this is gold. Sorry, let me go to crude.
Yeah.
Here
I was thinking maybe we could go under 40 one more time, but Okay.
That's possible. This is on the V contract.
Okay.
But the yearly pivot on crude oil, and I can't pull up the old contract because it's already expired, is at 42.50, and that's exactly where we bounced off of here, 42.50 back in June, and then we rallied up to $51. I wonder if I still can have that CLQ17 if it's still in here. Here we go. This was, even though this is expired, it's easier for me to explain. But on this contract, so crude, I think, is going to hold this 42.50 level, and I think it's going to come back up to this $52 level. The yearly pivot on crude is up at $56. Crude has, remember, futures have two sets of pivots. We have a continuous contract, and we also have the regular contract. And so futures sometimes can be a little bit difficult when trading the pivots because we have two sets of pivots and we have to look at two different sets of pivots. But I think this gentleman is correct. I'm bullish on oil. Some people are seeing a long-term head and shoulders, like Peter, who thinks it's going to fall. But I do see something happening with Iran possibly that could cause the war premium to come back into the cost.
Yeah, there's absolutely no risk premium in the price right now. Zero.
Exactly.
What a great interview, Jeff. I mean, you know, I really like your, you know, the way your demeanor and the way you explain things, and simple is better, you know. Call me Forrest Gump, but I like simplicity. So let's talk about something complicated like Bitcoin.
Okay, Bitcoin. Yeah, here's my Bitcoin chart, and this is for my subscribers. And Bitcoin pulled back earlier this week, to this 3,600, 3,650 level, which was identified. We have a weekly and a monthly pivot here, so that created a short-term support zone. And we're looking for Bitcoin to come up this week to 4,360 to right around. It's like 44.44, and that's going to be the resistance zone. This is just for short-term swings. Now,
have you traded it personally yet?
I have not. I haven't. Okay. I just filled out the application at Coinbase, and I'm getting ready to transfer some money over there. But I personally haven't. I think this whole crypto thing is going to crash someday huge. I think it's the millennials' pet rock.
Okay. All right, so, you know, maybe, you know, I've been using the parallel like .com stocks when you first started trading. And even though most of them melted away, we ended up with some stalwarts that rose from the ashes.
Yes.
So that would be a scenario where I would get involved, is if we ever had what you said happens. I don't know what potential catalyst it could be. I'd have to think it would be the government.
Yeah, or it could be one of the big banks getting hacked, one of the, you know, and people getting scared and pulling their money out.
Yeah, yeah. So you wrapped it with Bitcoin. Do you have your head wrapped around it? I mean, you know, I've heard about it for years, and we had a blow off a few years ago before this. So are you a believer long term in this technology, that it's going to become
an alternate
currency?
I don't believe it's going to become an alternate currency. I am a believer in the blockchain technology, and I believe that that will be implemented with every business, banks, and governments someday. But I don't believe they're going to use the Bitcoin or any of the other technology, because IBM and SAP are developing their own blockchain technology. And I think that's who the big banks and the governments will end up going with.
Do you think that governments might be letting this experiment go on because, just like India, a lot of governments would like to know about every transaction, and going cashless would be the way for them to do it?
Sure.
Okay. So that may be why there's been no interference to get people to become acclimated, embrace it, and then it won't be a big shock like it was for people in India.
Right, but you know, as a consumer, do I really want to have a currency that could fluctuate 20, 30, 40% daily? You know,
I couldn't handle it.
I couldn't handle it either. I mean, you go to the grocery store and you don't know what the price of milk's going to be.
But from one aisle to the next.
Exactly.
That's a great point. So Jeff, I want to thank you again, buddy. Why don't you show your website so people can know how to follow you and possibly subscribe and get your pivot points? And
I also want to also let you guys know that I do a morning video, a pre-market video every morning for my subscribers, and I just started a new subscription service on Primo Social with Josh Brown and Scott Redler and Sentiment Trader and Bespoke and a bunch of others. And so my pre-market video where I go over the support and resistance pivots for that day on the spiders and QQQs and Euro dollar and Bitcoin and stuff like that is now available on this site. And my website is pivotalpivots.com.
yes.
And I'm bringing that up right now. Here we go.
Stop guessing. Oh, when I see a picture of the floor, that's the NYSE, but
Exactly.
gosh, I miss it. Don't you miss it?
I don't.
You don't want to throw an elbow or anything to get and come in without trades the next day?
No, I have a couple of clients up in New York City and Connecticut that would love me to come work for them up there, but I just can't see myself living in New York City or Connecticut.
Yeah, it sounds like you have a nice lifestyle between Florida and the ocean and the mountains, buddy.
Exactly.
So congratulations on living the lifestyle that you probably dreamed of when you were early in your career, and great work, and appreciate you edifying our community today, Jeff.
Well, thank you for inviting me and having me today, Dale. I really
All right, you're my trading warrior brother, buddy. Don't forget it.
I won't.
All right, Jeff. Thank you very much. Everyone thank Jeff York. Definitely worth paying attention to. At the minimum, follow him. And I consider subscribing and getting great content from Jeff York. So thank you, Face, and thank you, Steve and Stell, and everyone. Have a great day. Tomorrow I have an interview with a fairly well-known guy. It'll be my first interview with him. It's David Everett at Trade Ideas. Be tough to top Jeff York, but thank you, everyone. You're very welcome, guys.
Thanks, Dale.
You're very welcome, Jeff. Remember, don't just count your pips, count your blessings. See everyone tomorrow.